Chinese banks extended 1.17 trillion yuan, $163.31 billion, in new yuan loans in December, which was up from November but fell short of analysts' expectations, according to data released by the People's Bank of China on Friday. New bank lending hit a record 22.75 trillion yuan for the year, which is equivalent to the UK's gross domestic product, up 6.8% from the previous year. This comes as the world's second-largest economy has struggled to regain traction, with a disappointing and short-lived post-COVID pandemic bounce. Consumer and business confidence remain weak, local governments are struggling under huge debts, and a protracted property crisis is weighing heavily on construction and investment. The economy is facing persistent deflationary pressures heading into 2024, and therefore monetary policy will be loosened to shore up growth. Interest rates should be appropriately lowered given that real interest rates are relatively high, said Zhong Liang, chief of research at state-owned Bank of China. Other data released on Friday reinforced views of a highly uneven economic recovery, with exports edging up but deflationary pressures persisting amid weak domestic demand. China's economic growth is expected to hit the official target of around 5% in 2023, and the government is expected to stick with that target this year. Analysts expect the People's Bank of China, PBOC, to unveil fresh easing steps soon to support the economy, amid concerns over deflationary pressures and questions over how long it will take for the housing slump to bottom out. The central bank is expected to ramp up liquidity injections and cut a key interest rate when it rolls over maturing medium-term policy loans on Monday, as authorities try to get the shaky economy back on more solid footing. However, the central bank faces a dilemma as more credit is flowing to productive forces than into consumption, which could add to deflationary pressures and reduce the effectiveness of its monetary policy tools. In 2023, household loans totaled 4.33 trillion yuan, or nearly 20% of the total new loans, while corporate loans amounted to 17.91 trillion yuan. Broad M2 money supply grew 9.7% from a year earlier, which is the lowest since March 2022, central bank data showed, well below estimates of 10.1% forecasted in the Reuters poll. Outstanding yuan loans grew 10.6% in December from a year earlier, hitting the lowest in over 2 decades, compared with 10.8% in November. Growth of outstanding total social financing, TSF, a broad measure of credit and liquidity in the economy, quickened to 9.5% in December from a year earlier, and from 9.4% in November. TSF includes off-balance sheet forms of financing that exist outside the conventional bank lending system, such as initial public offerings, loans from trust companies, and bond sales. In December, TSF fell to 1.94 trillion yuan from 2.45 trillion yuan in November, which was less than what analysts had expected.